Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you're new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Apple or Spotify, please give me a 5-star rating. It helps support the channel. It doesn't cost you anything. Also, don't forget to sign up for my free weekly newsletter. Link will be in the description. Let's jump into the big news, my friends. Today, there was an announcement that FTX Exchange is partnering with Reddit to help enable the payment of Ethereum gas fees. Guys, this is a huge partnership. FTX is one of the largest crypto exchanges, and Reddit, of course, one of the largest social platforms with millions of users. I think many of us have been on Reddit. It's very active, and they've been trying to integrate crypto and build tokens and do a lot of cool stuff. So let me give you the details. Amy Wu of FTX Ventures tweeted out the following: excited to announce our FTX global partnership with Reddit today with Reddit community points. Users need ETH for gas fees to transact with their points on chain, and FTX Pay allows them to do that. Now, whether you love or hate Ethereum and the gas fees can be ridiculous, that is besides the point. This is a massive partnership and on and off ramp, guys. So as we're going to see more of this, right? Imagine what Facebook's going to do. And if you guys recall, we covered the news that Facebook partnered with Coinbase. Just last week, it was with Meta and Facebook partnering with Coinbase. It didn't get much of the coverage that it should have because the BlackRock Coinbase news kind of overshadowed it, right? But we're going to see all of these social platforms in one way or the other integrate crypto platforms and obviously crypto technology. So Amy continues here saying, at FTX, we believe that the best Web3 products have thoughtful utility. Reddit community points represent reputation in the community. Users can take their reputation anywhere they want on the internet. She says community points on an ERC20 token built on the Arbitrum Nova blockchain can also be used to buy community tokens or special membership perks. Communities can use them to reward creators for gifting and incentivize good behavior. She says here, finally, Reddit is a pioneer in harnessing the power of blockchain to empower online communities to own and control their communities. We're excited to support them and their users on this journey. So first off, kudos to FTX for exploring these opportunities, and kudos to Reddit for embracing crypto, Web3, blockchain technology. This is the future. I think they're ahead of the curve here by allowing these communities to flourish and integrating tokenization and rewards and so on and so forth. This is the future, my friends. Many platforms will have their own tokens, and you will get benefits from using those platforms. Historically, being on Twitter, being on Facebook, and so forth, Facebook is making money off of your data, off of your information that you're publishing. You don't get any stock. You don't get any cut of the revenue, right? It's a one-way street. But in the future, it's going to be a more balanced economy where you are going to be sharing in the growth and the financial prosperity of these platforms via tokens. And of course, it's on the blockchain where it can't be manipulated and people can't hack it, or there's not double spend issues and so on and so forth. Many of you who are familiar with crypto obviously know these things. So make no mistake about it, my friends. This is the future. You're going to see many brands and companies and social platforms adopt this model. And tokens are going to be everywhere. And where you choose to participate, you will be rewarded with tokens. And of course, there's going to be interoperability. And the great thing is, many of us are holding the tokens for these blockchains, such as Ethereum, such as the XRP ledgers, such as Polygon, and so forth, where the building is happening on those blockchains. And what have we talked about on this channel? Network effect, right? The more adoption a network gets, the more valuable it becomes. That value will trickle down to the tokens, of course. We've seen this play out in many different blockchains. For example, Ethereum with NFTs and many other different things being built on it. So huge news and a sign of what's to come. This is the future, my friends. Now, speaking of NFTs, SoFi debuts ETF focused on NFTs, blockchain tech, and Metaverse. The firm tracks an index that also includes companies in the big data and artificial intelligence segments. So great to see ETFs being built for this industry. That is a positive sign, a sign of growth, and a sign that these folks are bullish on the industry. It allows folks to easily invest in a basket of these different technologies without having to worry about what's going to do this and what that, and you invest in that ETF basket. And this is what is going to usher in more money into the market. Now, that is a reason, part of the reason why Gary Gensler does not want to approve a Bitcoin spot ETF, because he's trying to slow crypto down. Imagine if we got a Bitcoin spot ETF approved last year, we could have easily seen a $200,000 Bitcoin. I absolutely believe that. And of course, alts would have followed because that money trickles down to the altcoins. So ETFs are certainly the way to go to bring in more capital, because not everyone can go touch crypto directly. You and I are holding it, we're buying it, we're investing it, we're holding it in our portfolio, self-custody, and so forth. A lot of institutions can't do that due to regulations. So top holdings in the ETFs index are Alphabet, Amazon, Siva, and Excentia, if I'm saying that right. SoFi has seen 500,000 people visit its Crypto for Beginners guide since it launched last year. So the SoFi Web3 ETF, which has a ticker symbol of TWEB, tracks the SoFi Selective Artist Web 3.0 Index. Wow, that's a mouthful. And carries an expense ratio of 59 basis points. It is set to invest in 40 securities related to tokenization, blockchain technology, the metaverse, big data, and artificial intelligence. Guys, an example of what is to come. It says here the fund also invests in more crypto-focused firms such as Coinbase and Galaxy Digital, as well as Bitcoin miners such as Argo Blockchain, Hive Blockchain Technologies, Marathon Digital Holdings, and Riot Blockchain. So guys, this, once again, very bullish, ETFs being launched by different companies, and this will usher in more capital into the crypto market. Now, Citigroup, they are hiring. It seems like all these banks and Wall Streeters are hiring for crypto, guys. They are hiring a DeFi and stablecoin risk manager as part of crypto push. Now, I don't think I need to remind you, look at the market cycle we're in right now. Bear market, blood on the streets. People are fearful. What's Bitcoin going to do? How long are we going to be stuck here, right? Those are the questions. There's fear. I've been through it, so this doesn't bother me. This is my second go around. I've been studying the market cycles and so forth. But for folks who are new, it's scary. But institutions and smart money, they're not scared. They know now's the time to go build, grab as much land as possible, market share. It's a land grab right now, and build and get ready for the next bull cycle, which will be larger than the past ones, guys. The next one, I think it's going to be epic because as we talked about in yesterday's video, there's going to be CBDCs part of the next bull market, and the governments are going to educate the masses about blockchain and how their fiat currency is now tokenized on the blockchain, right? Because we already have digital money. We just don't have tokenization where it's a true representation of $1 to $1 and it's instant settlement and things along those lines. Now, some updates on the Tornado Cash debacle. We know the U.S. Treasury, as reported yesterday, has sanctioned the Tornado Cash folks, citing $7 billion laundered, connections to North Korean hacking groups, and so forth. Well, the folks at Tornado Cash tweeted out, here's a list of Tornado Cash resources that were banned. The GitHub organization, personal GitHub accounts of the Tornado Cash contributors, all USDC on Tornado Cash contracts. It has here Infura, I don't know what that is. Alchemy platform. We also have the ETH limo. So a lot of folks are scared, of course. The U.S. government, U.S. Treasury comes out and says, no more Americans can use this, sanctions, so on and so forth. As we talked about, I understand what the governments are trying to do, but banning and sanctioning a platform versus people is not a good idea. And here, Jake Tversky of the Blockchain Association highlighted a problem as a result, because here's what's happening. Someone is sending Tornado Cash ETH to big doxed wallets like Shaq, Beeple, Randy Zuckerberg, Ben Horowitz, Brian Armstrong. So they're sending them to celebrities. So this is kind of open Pandora's box here. And Jake Tversky rightfully says this underscores the Pandora's box that the U.S. Treasury may have opened by sanctioning autonomous blockchain-based software for the first time. There's good reason why sanctions have always applied to entities, not technology. Treating Tornado Cash as an entity makes little sense. He's absolutely right. Let's move ahead. Canadian regulators are reportedly working with the United States government to investigate Celsius Network. So, I know Celsius got their bailout. It was mentioned that the folks at Tether, the folks at Bitfinex helped to bail them out. But I don't know if they're still in trouble here, because we haven't seen or heard from Alex Mashinsky, and it looks like the Canadian government is getting involved in this, and they could be getting more fines. So let's see what happens, guys. But just be aware that this is happening. And speaking of lawsuits here, Coinbase executives misled shareholders about public listing. New lawsuit alleges a Coinbase shareholder is seeking damages from 9 company executives and board members on behalf of the exchange. So I don't know if there's a case here, but when you're a publicly traded company, it's a bear market, and you've had just recently the SEC fine folks for insider trading who used to work at your exchange. It's open season, and a lot of folks are going to come out the woodwork and try to sue. But let me give you what the details are here of this lawsuit. The complaint, filed with the U.S. District Court in Delaware, was made by Donald Coker on behalf of Coinbase Global Incorporated. It alleges the company's leadership made false and misleading statements in the firm's public filings ahead of its direct listing in April 2021. Those statements allowed investors to purchase company shares on the Nasdaq Stock Exchange without the involvement of intermediaries like Wall Street investment banks, he claims. Coker, if that's his name, accuses 9 former and current Coinbase officers, including CEO Brian Armstrong, Chief Financial Officer Alessia Haas, and board member Mark Andreessen, co-founder of VC firm Andreessen Horowitz, of violating federal securities law, abusing their power, causing financial harm to the firm, and gross mismanagement. We'll see if this has legs. We'll see what happens, but something to keep an eye out on, and the implications that may have if this person wins this case. Now, crypto analytics firm Messari plots to raise $300 million valuation. So not raising $300, but at a $300 million valuation. And of course, I interviewed the founder Messari, I think it was earlier this year. And we're just seeing crypto companies still getting funding, guys, despite the bear market. And, smart money, they see the opportunity, lower valuations, the bear market, they can come in and grab a larger share of the equity. And boy, if I was, in a position where I had, I was wealthy, I would be doing the same thing, going out to these companies saying, hey, I want to invest and get a big chunk of it, right? In addition to holding the crypto tokens, right? And that is what a lot of these big time VCs, hedge funds, investment firms are doing, holding the tokens, and they're investing in and getting equity. And many of you remember I had linked to as a sponsor, and they allow you to get these equity shares. And if you are interested, you can certainly go check them out. You have to be accredited, by the way, but you can do it as an individual. You don't have to be part of a fund. So this is good news, guys. Good to see these folks are raising capital. They're growing, they're building. And let me give you some details. Messari, a crypto-focused data analytics business, plans to raise fresh financing. The startup is in the process of raising capital at a valuation of $300 million and has pitched potential investors, according to 2 people familiar with the matter. One of those sources said the company is looking to raise $35 million. That will be significantly more than Messari banked from investors in August last year, when Steve Cohen's 72 Ventures, the venture arm of a hedge fund that manages $24 billion in assets, led a $21 million Series A fundraise. It would also roughly triple the company's valuations. So Messari's founder and CEO Ryan Selkis declined to comment on the raise, but said via Twitter message, "We're continuing to build crypto's largest subscription information business, and we are focused on getting ready to release a slate of new products at Mainnet, a conference organized by Messari this September. More news to share then." So looks like they're going to be raising more money. And once again, the capital is coming in. If there was nobody to give them capital, they wouldn't be looking, right? And what we've seen, the trend is a lot of the traditional financial investors, hedge funds, and firms are now investing in crypto. They're launching their own crypto funds and so on and so forth. So once again, they have the long-term view. They're not scared by the current prices and valuations. They know this is just a cycle. We're in the bear market. We're going to come out the bear market eventually and go to bull market. New all-time highs. Money will be made. It is that simple, guys. The hard part for many folks is the patience part. Many people want to, or they think from a lottery perspective. Well, I put this amount of money, I become a millionaire out of chance. But no, you have to research, you have to invest, be patient, watch the fundamentals, of course, watch the news, listen to my channel. We talk about what's happening in the market. What are people doing? Not what they're saying. What are they doing? And just be patient and wait out the market cycles. That's how you make money in this market. And look, in the stock market as well, right? Because the stock market's down as well. I hold stocks. I buy some stocks, and some of it crypto companies. And guess what? They're down right now. The valuations, the stock prices are crap right now. But I know bull market's going to come back. Fed's going to start doing QE again, and we're going to see new all-time highs. But if you don't understand that, you got to take some time and to research and to grasp it. And once you understand that, okay, I'm putting my money in. If it goes down a bit, that's okay. Bear market, but I'm waiting for the bull market. Anyway, guys, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button, share this video, and I'll talk to you all later.